Yeah, good evening, members. Today's speaker, CA Ravi Kumar sir. I welcome you all for the virtual program on GST, Journey of GST, and its impact on selected sectors and transactions. CA Ravi Kumar, he is qualified as CA in May 2002. He is having post qualification of 20 years of experience entirely on indirect taxation only. Currently, he is working in Mylan Laboratories, Hyderabad, as AVP Commercial. Earlier stints in consulting in E&Y, Mumbai, Bangalore and Deloitte and PwC. Earlier, he was the faculty in the certificate course on indirect taxes conducted by ICAI. He has been a speaker at various events conducted by ICAI and other institutes as well. He is authorized articles on. He has written more number of other articles on topics of indirect tax matters. With this brief, I introduce CA Ravi Kumar Garu to this gathering. I hope the members will enrich on GST, especially on its impact on selected sectors and transactions. Thank you, sir. Thank you very much.
Yeah. Good evening, everyone, and thank you very much, Subbarao Garu, for that brief introduction. And thanks, SIRC, for giving me this opportunity to present myself and my thoughts on this entire journey of GST and various impacts on the selected sectors. It is indeed a privilege that I moved back to the southern region where I qualified after almost like 15 to 17 years in the western region. So this is almost like the third session which I have been taking on this GST. What I thought today I will cover is that how exactly the GST has evolved over the period of years. I think all of you know many of these things, but let me make it more interactive and let me make it more interesting is what I wanted to do. And while I will be talking about all of these journey, there are various things like the journey is not smooth. It's not definitely a flight ride. It's definitely a roller coaster ride. And at various points of time, we have got the feelings of tension and the various amount of pressure from our clients, from our peers, from our seniors on various things which are not in our control directly. So technically, what we are all talking about today is that how exactly this has evolved and what exactly we will be seeing this entire GST journey. Hope you are able to see my screen. If you can.
Visible, sir. Visible, sir. Visible.
Yeah. So when GST started, the GST has been introduced in India, right? Everybody knows that it is 2017. What exactly we wanted to achieve is that we want to achieve a subsummation of these multiple levies. Everybody knows that there are multiple taxes on the goods and services like VAT, CST, excise, service tax, entry tax, octroi. So there are innumerable number of taxes. That's what people used to say. Specifically, whenever a foreign person comes, he used to say that, boss, I can't even understand what exactly is the Indian taxation system. So a globe over, it is always this VAT or GST which is in vogue. And the objective of our government is to have a more simplified structure, which will actually align with global standards, but also ensure that there are certain native factors which we need to consider. So what exactly those native factors is the biggest factor of federal structure, where the revenues need to be shared between state and central governments both. So that technically what happened is, while we move to a concept of single GST, this is a dual GST model where both center and state governments are empowered to levy tax on a single transaction. So this is one peculiar feature. Second is, we have to ensure seamless credit flow across the supply chain, because what was happening in the earlier regime is that we were not getting credit of VAT against excise duty, CST against VAT, entry tax against excise, service tax against VAT, VAT against service tax. So there were lots of restrictions across taxes and credits. So what the ask of the industry is that because of the absence of credit, there is an increased cost, because there is a cascading effect. So what the government also noted as a point is that we need to ensure that there is a seamless credit flow, and GST is the solution for that. The other factor which is there is the uniformity of the tax rates across states and between states. So all states have uniform, and even if you are transacting between the states, there is no differential rate. And most important, but not at all least, is that the simplified tax regime, and we will touch upon this a little later as to how we achieved this, and whether we are on course of saying ourselves that we achieved this objective or not. That is how my session is designed. So this is something which I wanted to see. Like, we wanted to have one nation, one tax, but we ended up with having two governments at stake, and we have three taxes: CGST, SGST, and IGST, and four pieces of legislation, which is Act, Rule, Notification, and Circular, with a 5-rate structure. So whenever I see this one nation, one tax advertisement by the government, I always used to see, where is this? Because there are multiples of this legislation or taxes or governments involved or rates. So there is nothing called one nation, one tax. The headline statement is an awesome statement given by the then finance minister. But when we go into the details, always we say the devil is in the details. I don't know whether this is the devil or even a monster here. But when we actually ended on July 1, 2017, because the notifications came on 30th June 2017 midnight. So then when we saw these rates and all, it was actually a chaotic situation, and almost like we were almost like a scary situation, which was visible to all the people at large. So how exactly this entire journey transformed? So first and foremost, there was this Constitution Amendment Bill, which was done in 2016. Then there is this implementation of GST, which happened in 2017. We have actually implemented this e-way bill concept. Earlier it was a state level e-way bill, but a nationwide e-way bill concept on both local and interstate movements, which we started in GST as well from 2018. We moved further, and in fact, this is one of the greatest achievements, I would say, is that on a scale of like 30 states and then 7 union territories, we also implemented the concept of e-invoice and dynamic QR code to actually have a seamless flow of transactions between buyers and sellers. And then we have also got into a situation now where we were actually telling that there are system-driven input tax. Earlier, there were certain formulas given that you are entitled to whatever is reflected in your GST or to a plus some more percentage, etc. But now we have reached a situation that we will be getting, or the trader will be getting credit only to the extent of the credit which is reflected by the system in the form of GST or 2B. If you see from the time when we started, if somebody asked any of us like whether it would be like this after 5 years, many thought that it would not be so. Of course, there are various hiccups, various hindrances, and the technology played its part worse than expected at various points of time and worked beautifully and than expected at some other points of time. But till now, there is no settlement, because even a month ago or even this month, we do have certain problems which are being popped up by the GST system and say that there is some bug, there is some error, please do consider like this, please do not consider like this. There are various updates which do pop up on the GST portal. But considering the nation, the size of transactions were almost like a billion plus transactions will happen regularly, and the kind of mammoth infrastructure which is needed, we can't directly say that it's a complete failure, nor we can say it's a complete success, because the expectations are always sky high. But on a scale, I would say that we have reached to a stage that people are now accustomed to the way of compliances, accustomed to the way of reading these GST legislations, the rates notifications, all of these which have drastically reduced. If you see the number of notifications issued in the first 2 to 3 years, there were almost like hundreds of notifications and circulars which every other day people used to actually forward. So the WhatsApp is filled with every notification, every circular, and I was also in consulting at that time. I can imagine the kind of pressure people in the consulting fraternity had in updating themselves before updating their clients. And it was all spontaneous because of the technology of WhatsApp. And there were WhatsApp consultants too who used to populate various tweets as if it is by CBEC. That is also one more interesting thing, but it was very challenging time. But I think over the last 1.5 years, if you see, the kind of amendments have been reduced. The kind of amendments have been mostly on the input tax side, so that the government can focus more on the fraudsters who are raising fake invoices, etc. And also there is a decent control mechanism for giving the credit only to the extent of the credits which are populated by the supplier while filing their GSTR1. All in all, if we see, this is a roller coaster journey, as I said, and this is nothing but the game is not yet over. It's actually at the initial overs, because this is a long game which we all are there. And I used to jokingly tell to my various people that at least my career is secured because I chose indirect taxes at the relevant point of time, and I'm not too sure whether the generations will follow with that. But after seeing GST for 4 years, I'm pretty much sure that this has a lifespan of more than 3-4 decades, and the law will definitely not settle even then. And if there is any nationwide implementation of single GST and all, life continues. So there is enough of meat for everybody in the consulting fraternity, in the chartered accountant fraternity, in people practicing on the GST. So there is lots of inputs, lots of things which people can do, and there is lot of dissemination of the information also which is needed. And thanks to institutes like ours, which are actually conducting these sessions, we all are fortunate to have these sessions where we share our knowledge as well. So one of the things which we can see, which are not there earlier, is credit is driven through automated flow. So right, the GSTR 2B, which we are currently seeing, the credit which is available to a taxpayer is not driven by his own purchase register anymore. He may have reported to his management saying that this month my credit is so and so X amount of million, etc., etc. But that is all it is his management reporting, because government is very clear in telling that the credit entitlement is not based on your books solely, but is dependent on how much soever your supplier's compliance status is, and how much soever their correctness of the records which they upload. So technically, while you may have got a, say for example, a 5 million credit in your books, you are not sure till 14th of the subsequent month as to how much credit you will get. And after coming to this side of the table, where I am now part of industry, I still wonder certain people coming on 12th or 13th and say that I missed filing certain returns. So then my input tax credit goes for a toss, but nothing doing. There is a rule which is in place, and I can't go above the rule, and we have to comply with that. So my entire input tax credit is now driven by automated flow of supplier invoice. This is something which is there in pockets in some of these VAT laws, but not at the scale at which GST implemented. Now the second one is e-invoices and dynamic QR codes. This is something which we have never anticipated, even with this problems which we faced at the time of implementation or e-way bill. I think one of the success stories in the entire technology is e-invoice, considering the number of problems which the systems have given, because it is far less times that the dates have been extended. In fact, once or twice they extended, but they stuck on to those dates with the proper segregation of turnovers, and then slowly coming down up to people having turnover more than 50 crores, or now all of them are brought into the e-invoices. Now the other important thing is advance rulings, which many people thought is the right decision taken by the government, but actually is it advancing the clarity or is it advancing the litigation? That is something which we are actually worried now. In the first 1-2 years, if we see, many people left, right and center used to go to advanced rulings and then get rulings. People thought it's a very wonderful mechanism because that is a binding order which is coming. But once people started analyzing the trend, everything is almost prone to the government. So I have a detailed slide on this advanced ruling and their problems subsequently. But what I just wanted to try is that whether we are getting the required clarity or actually we are advancing litigation. This is something which we need to understand. Now this integration with customs, where you import the goods on which there is an IGST payment, that IGST is available as a credit, and therefore you are actually entitled to the credit based on what your system shows from the import side as well. So that system is in ICAI, which is different from the GST, and there are certain integrations even for the customs. Now the other new concept which the service sector as a whole has actually grappled initially is state level trial balance, because they were in a service tax regime. They were never faced with this situation. There used to be one service tax registration across the country, centralized registration and half yearly return. Now that half yearly return has changed to monthly return. Monthly return has changed from country level to state level. So it is for services sector, actually there is a huge chaos which happened. But I fortunately think that with the kind of technological advancements or dependencies of the ERPs, etc., many people have been able to cope up with the requirements, and this problem we are not hearing as high as earlier in 3-4 years back. So if I may pause here, people may use the chat box. So what's the important change GST has brought about? If we can just have some interaction, because this is virtual, I can't actually speak to everybody, and I'm not too sure whether organizers allowed everybody to chat here. If that is the case, I would request
They can
some
put
answers.
it in. Yes, sir. They can put it in chat box or the question panel. Actually, we say for attendees, and also we'll try to unmute everyone, and those who want to interact, they can interact, sir. They can unmute and speak actually.
Let me see how they are, because this. So the question is here: what's the important change? So is it confusion? Has it brought confusion more, or has it brought clarity? Or you can't say, check with my consultant for everything. That's the life now, because I'm not too sure. Or is it a bit of all of the above? Because when I was in the consulting industry and the kind of queries I used to get, I always used to feel one or the other from most of the people. So I just thought to make it more interactive, what exactly is the most important change GST brought about in this set of audience?
Audience can unmute and they can interact. Yeah, unmuted everyone. So. Also, they can
Or
put it in chat.
they can send their chat, whichever
Yes.
is more convenient.
Yes.
Sorry?
So, not hear them clearly. Mr. Perumalswamy, do you want to say something? We can't hear you clearly, sir. Some of them are unmuted, but they didn't say anything.
No problem. No problem. Let's wait for a minute and then I'll see.
Yeah, one thing that came in question, sorry, chat box is transparency from Mr. Srinivasan. Response.
Yeah, I think
Mr. Srinivasan, if you
that's
want to speak, you can unmute yourself and you can interact. And the others, they can put it in chat box or else they can unmute it.
okay. Then let me proceed. So my take is that I think there, while I heard one of you telling that transparency, definitely that is one of the good things which happened in the GST regime, transparency. I would say that it is a mix of all. Actually, you can't say that there is no confusion, or you can't say that there is no clarity. All of them have its own share. It's only that period of month in which at what point of time you are there and how Infosys has helped you in filing your return, the mode on that day, whether you are filing on the due date. I think there are lots of intangible factors which contributed to your feeling. I think that's how I look at it. But most importantly, what happened is it actually reduced a lot of manpower requirement in the industry in terms of handling at each state level. That is one of the things. And then we also had this debate technology advancements which helped in compliance. I think these two are the major things which we can say. So a small anecdotal thing which I just thought, because everybody told that it's a good and simple tax, and so how the compliance is there is it's very good and simple tax because it involves very simple recourse: sales register versus GSTR1, GSTR1 versus e-invoice, e-invoice versus e-way bill, GSTR1 versus e-way bill, purchase register versus GSTR2A, 2B, 2A versus 2B, 1 versus 3B, and all of this on a monthly basis, state level, and then tallied at the end of the year. So it's very good and simple tax. Not sarcastic, but the kind of technological advancements have never made us realize that we as a chartered accountant consulting community handling the compliances, and also the people who are handling the tax function within the organizations, are almost doing this without much of a problem, which they were earlier used to say. Probably in 2018-19, if somebody had asked the same question, is it easy? I think the answer would have been a no, and people were in fact telling, let's move back to that. But now with the kind of things, I think on a scale of 100%, if we have to say, technology is mostly like at least around 90% we reached consistency. We know how the technology behaves. We know what kind of errors generally creep in. We know how the kind of resolution mechanism. But when we do all of this on a monthly basis, now there is no panic, because the processes are set, the procedures are laid down, you know whom to reach out, and the ERPs are also so very well laid out by either the ERP architects or the technology consultants. They have also beautifully laid down all these important charts and important dashboards, which will help us in the long run. And this is if there is no further tinkering. I think the last of the tinkering what I could see is that restriction of the credit only to the extent of 2B, and now not telling that only I will give 90% of 2B. I don't think that will happen. But if this is the last of the tinkering, I think we are almost through with the kind of technological changes which we need to do at our in-house ERP. Once this is done, and say for example, once we have a probably one or two quarters, if we do, I think everybody is in a good track to give information. The challenge lies ahead, definitely in terms of handling past data, assessments, audits, inquiries of the department. So that is not going to be taken away. So that is also probably which will continue for the next 2-3 years for the first initial 2 years time limit to complete. like 2017-18. Probably we may have time till around 24 or so we will get. So maybe another 2-3 years if we weather out these initial 2-3 years assessment. I think that is when the full benefit of the technology and the reports and all this will come to see the actual limelight. And then people will say that we have built in a robust and world-class technology. So with the kind of reconciliations, this will look like this. But if you know which signal you have to see, you're always on the right track. Not as easy as I say, but technically this is how it was laid out, but very, very complex, because I have actually talked to many people across various countries, and I can give an anecdotal here. We worked for one of the global clients. In fact, he is into this hotel. To me, because I've worked in at least like 7-8 different sectors, hotel sector has actually given me a lot of news kind of insights because of various peculiarities. Let me tell you, because hotel involves room service, restaurants, bar, event management, cool drinks which have compensation sales, vegetables, cutlery, all these things which are not from non-registered suppliers. And then hotel as an industry doesn't have a single ERP. So with all these things, we were actually worried, and we were actually wondering as to how to do a GST mapping for each kind of service revenue, because with the kind of permutations and combinations, there used to be roughly around 30 to 40 streams of revenue, like room with room rental with food, room rental with food plus cool drink, room rental with food, cool drink, and alcoholic drinks. So all of this, if we see, we were worried, and then we approached someone in Malaysia and to ask how has Malaysia implemented this, because we have almost like 5 different rates, we have different classification for different kinds of services. So it has become a chaotic situation for us. Malaysia, the kind of person whom I talked to, in fact, he told us, how would you handle all of this? He gave me a simple one-line answer saying that in Malaysia, there is one entry called supplies in hotel, which are taxed at a single rate. Whether you sell biscuit or whether you sell beer, whether you sell food or whether you ask for the room rent, whatever is there, all supplies in a hotel are under a single tariff heading. So this is exactly what the kind of simplicity which they have worked out. Of course, in India, reaching that stage may be a dream at this point of time, but at least there are certain international references. That's why I just wanted to show is that these kind of complexities do exist, but we have moved to a stage that at least we know where to look out and where exactly the answer lies. So to summarize this entire thing, the hits and misses, if we have to summarize how exactly the entire journey of GST has evolved over the period of last 5 years. The hits would be, one of the biggest hit is adoption of technology, because nobody would have given a thumbs up at the time of introduction saying that we will have this kind of robust technology which is working so smooth. And in fact, e-way bill and e-invoices, like the way I told, are the biggest hits without much of a problem, and everybody in the industry, when I talk of everybody, there will be definitely 5 to 10% of the cases which might have faced, but generally as a 90%, that was a grand success. Uniform rate structure. No one is now saying that boss, in Assam what is the rate, in Meghalaya what is the rate, in Bihar what is the rate. These kind of questions are all gone. These kind of issues are not there. What is the return format across the country? Are there the due dates, the complaints calendars, the tools which have the information which the officer at Jammu and Kashmir asks, or the Haryana the officer asks versus like AP officer asks? Nothing. Everything is streamlined. Uniform compliances, uniform rate structure, and seamless movement. You can see actually the goods moving with RFID tags on the trucks and the e-way bills and all of these. This is completely a big hit, I would say. And to achieve that, in a country like India with the kind of number of transactions in 5 years, I think we have done fairly well. Is what we get. Having said that, it's definitely not that everything is a hit. Definitely, we are as a movie buffer. No one gives a 5-star rating. Everybody stops at giving a 4 or a 4.5 star, because there will be certain drawbacks in every movie. Even a Rajamouli movie will have certain. If you see reviews, there will be certain drawbacks. So like that, if we see the hits and misses, have the misses also where there will be a long drawn litigation process. As of now, we don't have an appellate tribunal. We don't know where to go if the commissioner appeals now passes an order. Unsettled advance ruling mechanism. So I have an advance ruling where there is an appellate authority for advance ruling. After that, what should I do? What will happen if I have a contradictory ruling for myself in 2 different states? Too many changes leading to chaotic situation. This all happened, I think, in the first 3 years, but that has caused enough of the confusion. And unfinished agenda on subsuming. This also I will touch. Like, say, for example, the electricity duty is still continuing, the stamp duty is still continuing. We are still, I would say 80-85% there, but that the final leg, because the other taxes which you pay on your procurements are far heavy, and those still contribute to the cost of the product or the cost of service. So to summarize the journey of GST, this is how I would like to put, like, there are various hits and there are certain misses too at the same point of time. But overall, it's a fairly decent journey considering the situation we are in. Probably at the end of 2 or 3 years, if somebody would have asked, they would have laughed at me, and the chat box would have been full with saying that, are you the friend of the FM? But I hope now at least people will echo similar thoughts, saying that at least there is some kind of consistency and some kind of clarity with which I can practice on the GST, and also I can safely tell my views to clients without many riders. I would say still we put our riders if we are actually the practitioners, but definitely not the kind of riders which we used to ride, saying that this law is as on date, I don't know what happens tomorrow. That kind of a rider is also what we have seen, because you never know, after release of your opinion, the rate change would have happened by midnight, and the opinion would have been gone into dustbin, because that kind of notifications used to come. The extensions used to come after the due date. So people used to pay, in fact, the fine and penalty, and fight for the refund of fine and penalty which they paid. I think all those system related issues have been also done, because the recent example is, I think in April or May, the GSTR 3B, the due date is 20th. I think by 17th or 18th, we got a notification that it is extended by 2 or 3 days. So at least 2-3 days in advance, they realized that there is a bug in the system, and which is creating hurdle for payment of GST, and immediately the government has woken up and then given this. Even current month also, the bugs were reported well in time. We are still on 18th, but we know that there are certain bugs, and there are certain bugs which have been resolved as well. So at least the progress is seen, and that's why I'm confidently able to say that the hits and misses are of equal proportion. But on a given date like today, the hits would be, if we stop here and analyze, I think the hits are more, and the misses are almost fading away in the times to come. Now let me go to industry-wise impacts. So when we actually move to GST, various sectors, like 2 sectors which I have picked up here is manufacturing and services, because one is into goods and the other is into services. What are the basic and a very high level industry impacts which happened here? Is factory-wise registrations moved to state-wise registrations. In fact, this is a boon for all the manufacturing, because many people used to have multiple factories and multiple excise registrations. They used to actually have their own RG23A, RG23B, RG23C registers at each plant, and then the excise registers have to be mapped with the state level VAT. That's also going to be was going to be a big challenge. Excise audits for each plant are different, because the ranges used to be different. Now all of that moved to a state level. At least one level of consolidation happened. Complex non-uniform VAT compliances. Now there was nothing called a different format of compliance, like the way I told. It was all uniform. And increased credit flow. So earlier, like VAT was not available as credit, service tax was not available against VAT. All of these things were removed. Now there is a increased credit flow. At least people were able to jot down exactly what credits they will get, what credits they won't get. However, in services sector, the opposite happened, because centralized national-wise compliances have moved to decentralized state-wise compliances, which is a big jolt. However, they have also coped up and now they are almost settling in. Increased credit flow is also here, because earlier they used to lose big time on the VAT procurements, but now at least they are getting credits. Now, other sectors which I have tried, like hospitality sector, which is what I was trying about, these hotels, etc., most complex. This is the impact which I would say, because the presence of transaction even with non-GST goods. And also there is credit restrictions. They have also introduced certain schemes like restaurants and all, where credit is not allowed, and you have to pay a particular like 5% without tax, and without credit, or 12% without credit, because that is actually stopping the credit flow as well. So those are certain peculiar transactions for hospitality. Moving into real estate, this is the another complex industry, because immovable property is still outside the purview of GST. That's what I was mentioning, that stamp duty is still yet to be brought into the coverage of GST. And there are also long gestation projects. It's actually that you actually do a pricing schedule at the launch of the project, but by the time you end the project, we are not too sure, because when people in 2017 have drawn out their projections for 5 years, no one expected that in 2019 there will be a new scheme which will completely alter the credit flow. They have actually introduced a scheme where every project has to be moved to a new regime without credit, but at least they heard the industry representations and have given an option to the developers to choose either a higher rate with credit or a lower rate without credit. But technically what is happening even today is, because each of these projects are at least 5 to 7 years on an average, so there is still a lot of confusion. I think unless there is no further change, probably we will see some kind of a settled tax position only around 25 or 26. So real estate is something which people will have to look at more carefully, and the kind of combinations of rates there also is a mammoth exercise everybody has to do. Technology is one thing which we have to understand, including these e-commerce operators. Pace of evolving. So we are actually evolving at a pace where the legislation takes its own sweet time to draft a legislation. Till today, we don't have something called cryptos, which I will talk on subsequent slides. But what is happening is the evolving technologies are going at a rapid pace. So we should have actually something in the policy who is actually monitoring these technology changes, and if not a foolproof guidance, but at least there should be some at least path laid down to say that how exactly these technological advanced transactions will be taxed, or credit movements are given, how exactly we have to consider the impact in a specific situation, because no one expected Swiggy and Zomato to be the kind of hits today thanks to COVID, or I would say that for many other factors, COVID is the most important, but people's lifestyle have changed and Swiggy, Zomato have become, and when people have to introduce a tax on the aggregators, not on the restaurants. So there is a lot of change. So each of these change has taken its own sweet time. While people may appreciate that at least the government is reactive, we definitely will not be in a position to go into a proactive mode, because the government is not having that advanced technology business experts who are actually going to formulate new businesses. They will have to cope up with the new technology, but the reactive speed at which these changes are coming has to be improved. If at all we need to actually talk about more tax friendly regime which we have. So this is the kind of industry-wise impacts which we can see in the because of the GST across the country. So I would like to pause here and see if anyone has any questions, because I would like to go on to specific transactions from now.
Yes,
Yeah.
Audience, you can unmute yourself and you can ask if there is any query. As of now, there is no query. So apart from the response regarding your question initially, this thing, and many were asking for a presentation to be maybe after
Sorry?
end of the session. Many were asking for a presentation. Maybe we'll be sharing it after the session once we get.
Yeah, I will share the presentation with the organizers.
Yes, sir. Yes, sir. We'll circulate it post completion and in 1 or 2 days time, sir, and also in the website.
Yeah,
And
I will share it with you. You can
yes,
you can arrange to circulate it to the audience.
audience, if there is any query or you want to interact with speaker, you can unmute, or else you can put it in chat box or question box.
And also the details of tax savings mutual fund. And also the details of
Yes, sir. Hello.
tax savings. Details.
Bhumija ma'am, do you have any query? One. So there is one query to read it out. So is there a proposal to increase the GST rates in the near future by Mr. Naresh?
See, I would not say it is an increase per se, but it will be a rate rationalization which people are actually talking about. That merging of 12 and 18 is going to happen sometime soon. In fact, the latest update, which is today's afternoon in some of the forums where I have been part of, they were telling that there is a ministerial committee which wanted some 2-3 more months to finalize on that. But that is not a per se rate increase. If you see that there might be an increase of 12% to say, if they merge it into 15, there is a rate increase, but it is not directly like that. 18 will come down to 15 as well. So that is one of the things, so that the number of rates they want to reduce. That proposal is there on the cards. And we have to also see 2024 elections. If at all we have to consider that to be done, whether now or whether in 23, how exactly that will happen. So there are a lot of political factors as well, which people have to understand.
Not right, sir. So, is there any other query from audience, chat box, or else through voice? Or else can we continue this?
Yeah. So I'll proceed. Huh?
Yes, sir.
So from now on, what I would say is that I have picked up some 10-12 different kinds of transactions, which were points of, I won't say that points of national debate, but definitely for those who are following the GST and who are practicing GST, these are definitely matters of huge concern. At least people would have faced over last 4 or 5 years, and still some of them are unresolved. So we can discuss and deliberate if there is any specific question. But what I have tried to capture in this presentation is some 10-12 different kinds of transactions where which are of important across various sectors. So the first one, which is latest, I would say that right from the Supreme Court judgment, which we have almost like a month ago. That's it. So one of the landmark judgment which has come in the case of Mohit Minerals. So to give a brief background about what this judgment is all about, the judgment is all about whether in a CIF transaction. So the CIF is cost insurance and freight. All are inclusive. So when an importer, say if I'm buying products from outside India and I have negotiated a CIF price, so that means that I will actually pay a single consideration, say 100 rupees to the foreign party. The freight is actually given to the foreign party, and he engages the freight service provider. And it is his lookout to engage the service provider, and he will actually deliver the goods in India. So my job is there to collect the goods at the port and then clear based on the customs duty regulations and then move the goods. Now, in this kind of transaction, what happened is there is this element of freight on which there was a transaction, because if in a FOB, which is free on board, Indian importer used to engage a shipping party who will actually provide freight services. So on that there is a service tax. So on CIF, what government has brought in is a arbitrary 5% of so a specific percentage they have actually imputed as the value of freight service and wanted the industry to pay GST on this. So many people actually debated this, and Mohit Minerals is the first one who went to the Gujarat High Court also and got a favorable judgment at the High Court, which also got upheld by that Supreme Court. So what exactly happened here is the people were actually asking 2-3 important questions, because many people joined at the time when the Mohit Minerals judgment came at the High Court and Supreme Court. There were many parties who were parties to the same writ petition. The first of the thing is that who is the recipient? If I say, for example, as a recipient of as a purchaser of the goods, if I as a recipient negotiated a CIF price, what I expect is that I will not have any dealing with the freight service provider. It is only the exporter. So technically, it is the foreign party who is the recipient of the freight service, and therefore I cannot be regarded as recipient. Why is this relevant? Is reverse charge is applicable only on recipient. So that is the first and foremost logic, where they said that how can an Indian importer be regarded as a recipient of a service without having a privity of contract. The second important is on the entire CIF price, I have actually paid the customs duty, whatever is applicable. There may be exemptions, but technically there is a levy on the CIF price, which is including freight. So if I'm already paying the customs duty, which is on the import of goods, including the freight amount, then where is the question of another leg of supply, of service in the form of freight, on which I need to pay GST under reverse charge. Now, when it reached finality with the recent Apex Code, I think the media has blown it out of proportion on one of the most important observations, saying that whether GST Council's decisions are binding on the government or not. I think that's one of the arguments taken by the government's advocate, the Attorney Solicitor General. But that is not the major criteria. But the major criteria is that whether there is GST to be paid on the CIF transaction, where they told dual levy cannot be the reason. So there can be situations of dual levy. Customs and service GST may be still possible. Importer can still be construed as a recipient because he is the one who is getting the service finally, because it is his goods. So in fact, if you read the judgment, exactly where exactly the judgment is positive is, they viewed this entire transaction as a composite supply, because CIF, all these are independent, like goods, insurance, freight. So you can't actually vivisect a composite supply, because in GST, when you are actually taxing a composite supply, the principle is that only the principal supply tax is applicable. Here in this case, goods is the principal supply. So you can't vivisect that and then say a particular levy should be outside the composite supply and I will tax it independent. This is the logic which has actually gained importance, and what the government has told is that we agree with this logic. Because of this logic, there cannot be a GST on the freight component. So now it is up to the government to see if they want to amend the law or if they want to retrospectively amend the law and go back on their promises that there will never be a retrospective legislation. All that has to follow, but still early days. There's news coming in saying that government is weighing all options, whether there should be a review petition on this. All of this will come, but this is definitely a matter which is of most relevance, because the stakes involved are pretty high, because various people paid crores of tax and actually waiting for refunds. It will be in thousands of crores once the refunds have to be processed. People have taken the credit already, that's a different story. But people who have actually contested by paying the tax under protest and waiting for refund, this is going to be a mammoth exercise, and they won the matter finally with the help of this Supreme Court's positive ruling. So this is how it is. But one associated question here, which in fact many people are asking here, is that the similar kind of notification is there in service tax period towards the fag end. There is somewhere in January 2017. So for about 6 months period, there is this new kind of levy even in service tax. Unfortunately, that that matter is not covered within this Mohit Minerals case, where the judgment is now given. There is a separate litigation going, and the kind of logic which the Supreme Court gave, there might be a chance that in a service tax regime, because the law is worded differently and the absence of a composite supply, etc., we may see a different kind of ruling from the service tax. But thank God this all happened after 5 years. So at least the limitation period till March 2017 is almost over. So only 3 months impact is going to be there, if at all there are to be new show cause notices. If people are already contesting the matter and the show cause notice is already given, that's a different story. But new show cause notices, the impact will be roughly around 3 months, which people need to know. And if that also comes in favor then I mean, it's a good victory by the trade. So this I thought is the one of the most important judgment and live judgment which people have actually been reading across various tax journals, and many people have covered it. What exactly is the point of the GST consideration is, in fact, the Attorney Solicitor General has raised a contention saying that once GST Council has upheld or once has recommended a levy, then the state government and the central government has no choice but to implement it. This is one of the grounds taken by Attorney Solicitor, which the Supreme Court told no, it is always a recommendation. It is not mandatory. I think though that observation is in the context of an argument taken by the ASG. But unfortunately, the kind of attention the media took advantage of that entire thing is has actually diluted this important aspect, because many people haven't covered actual crux of this judgment, is what I felt. But more or less, people in the tax fraternity welcomed the decision because at least it's a more reasoned judgment which one could see. And this will have impact across sectors, whether it's manufacturing or trading, or even for services companies where there are import of goods, be it capital goods, be it other consumables, etc. So all kinds of industries will have impact, including those who are like importing the petrol and all. So there are various players, whether it is GST goods or non-GST goods. This is having a wide ramifications across the trade. So it's up to us to see now how the government will come back, whether they will actually say that this is going to be accepted by them, or whether they want to bring in a legislation to at least circumvent whatever the observations of the Supreme Court. Then the language has to be more and more tight. And if that language has to come, can they make it retrospective? If they make it retrospective, that is the definitely a big burden, but more or less, if you speak to the leading lawyers in various webinars, many people are telling that the chance of a retrospective amendment is very, very minute, but definitely we can expect some change in the law in the coming budget, or if not as one of the even between also there can be a chance of amendment which the GST Council may propose. So this is one of the important transactions I would like to cover. The second one is, this one was actually more during the initial 1-2 years, but nonetheless I thought it will cover all industries, because there were many industries who are actually purchasing solar power generation systems and giving contracts to various solar power generation. So technically what happened is where they used to have the supply and installation contracts of solar power generation systems. So the solar power generation systems are at a different rate, services are at a different rate. Now there is this concept called works contract, which talked about taxing it as a composite contract at a single rate. The difference what happened in works contract when compared to the previous regime is, in previous regime works contracts covered both contracts involving movable and immovable. However, when it moved to the GST regime, it covered only immovable. So many people started arguing whether solar power generation system is an immovable property or not, because it's a nut and bolt kind of a situation. They wanted to have that kind of an argument. So there are various rulings which came. Some told it is a works contract, some told it's a separate contracts are possible, separate rates are possible. Finally, it ended up with a alternate scheme with 70-30 proportion, and then taxed accordingly is what the government has proposed to settle the issue. Is someone wanting to ask something?
Let me check. Ms. Sonika Gupta, is there any query, ma'am? Bhumija.
Yes.
Yes, sir, please. Yes, ma'am, please.
Yeah, ma'am, go ahead.
She again got on mute, sir. There is one question that came up. Shall I show the screen, or else we'll take it up at the end, sir?
Yeah, is this on this transaction or the Mohit Minerals one?
No, it was earlier one, sir, when we are discussing the initial part. Maybe after this, we'll take it up at the end itself. Maybe no problem.
Okay,
continue.
Okay, we'll take it up at there. So this is one example which I thought is relevant, is that there were lots of articles which were written about the various advanced rulings. In fact, one of the parties like Giriraj Power or somebody who actually went to advanced ruling in 2 different states, and 2 states have given contrary rulings. In fact, that created the chaos, and actually the entire advanced ruling system has been criticized. I think that is when government also has got various representations from the industry people, and then the government had to step in to come to a alternate scheme, and then notify that alternate scheme. Why I was referring to this is the pro trade, I would say, at least the resolution. Whether 70-30 is the right or wrong is a different argument, because the government will have their own calculation and trade will have their own. They would have told 75-25, or they would have told 80-20, or they would have told 60-40. That's a different argument. But at least there is a clarity. There is something which is settled after the disputes and the kind of chaos which the contrary advanced rulings have been created. And that is the reason why I thought, let me put this as one of the specific transactions which we cover in this session. The third one is levy of GST on the real estate. Now, all of you know that when you are actually constructing, when you are actually buying this under construction property, you are required to pay GST on after taking away 1/3 deemed deduction for land value, and rest you have to pay those whatever 18% if it is earlier, or if it is 5% now. So those rates you need to pay accordingly. The important factor here is that 1/3 is deemed as a deduction, and it is not given as an option to the taxpayer. So if I have to say clearly whether the land rate in Hyderabad, within Hyderabad, whether it is Gachibowli or Kukatpalli, or whether it is within Bangalore, some of these Whitefield or Electronic City and the other interior parts of Bangalore or any other location, if you compare, the land prices definitely is not one and the same just within a span of a couple of tens of kilometers. But to fix a rate for a country like India, saying that it is 1/3 is deemed land deduction is what has caused a problem. because in places like Mumbai, it is definitely not 1/3. It is actually like more than 50% would be the land cost, because the land is scarce. Whereas in case of Hyderabad or Bangalore, it may not be 50. It may be 1/3, or it may be roughly in and about 10% difference here and there. In an interior place, the land value may not be even 10%. But still he is enjoying a 1/3 deduction because he is actually bound by the notification. Now, whether this is right or wrong, there is a recent High Court judgment which is tell that this cannot be the basis for levy. So you can't have a single percentage which is fixed, because you have to fix a rate on the service portion. Land which is outside the portion of GST, you can't actually deem it. It has to be the actual value of land. So we have to see, because this is still a High Court judgment. It's a long way to go. But definitely people have not started to look at these as a positive judgment, and developers are in fact now worried, because they would have collected GST, and several customers would have now come back and said that let's wait, as if they are going to get a Supreme Court judgment tomorrow. But this is definitely going to create some unrest. But if the government is able to clarify it sooner or later, that would be a good ending point. Definitely, in India, taxes never end. As many people say, death and taxes both are inevitable, and you have to live with controversies if you are in India. So we always say that we need to have these kind of issues. Otherwise, there is no as a Telugu film going audience, we have to say that there has to be kick in doing everything. And for a chartered accountant who is here, he is always likes controversies and interpretations, and coming out of splitting the language in such a way that the interpretation goes for a toss and gives some varied kind of logics, etc. So that's the fun and of being a tax consultant, I would say. And so we don't expect some of these issues to settle so easily. So several people have started writing articles as if they can go and buy the property with actual land value deduction. So people have started making their mark felt when the judgments have started coming, like the way the Mohit Minerals has seen lot many. I think this judgment also has got a considerable share of media coverage in terms of amendments to the GST law, which can be expected, etc. But nonetheless, this is an interesting development. Probably in the coming 1-2 years, we will see if any other High Court ruling will come on this, or how the Supreme Court will take up this matter, because government is not going to leave this at High Court and say we accept the High Court judgment. This is definitely not going to end it like that. Other important in the real estate only is transferable development rights. So if I had to explain this transaction, let me just take a pause here and explain what is transferable development right. Transferable development right is an alternate, like say for example, if I have a piece of land, I do have an option to construct a home of my own, so where I engage a contractor and get my home constructed, or sell my land and give it to a developer so that he constructs and sells. But in either case, I am not getting the intrinsic value of the land when I'm selling, because I may not be the better marketing. I may not have the better marketing. So there is a via media which the industry has created and which has evolved over a period of time, where the landowner gives the development rights to the developer or the builder, so that they jointly develop the property, and the builder's marketing expertise is taken, construction abilities are taken, and landowner also gets a share out of the branded buildings, and so he can monetize the land better. What is important here is that he will never sell the land. So if you as a buyer go and buy a property where there is a transfer of development rights, there will be definitely a tripartite agreement with the developer and with the landowner, saying that landowner is giving consent to transfer the undivided interest, along with the developer giving the consent to transfer the share of building to you. Now what has happened is that whether this transferable development rights is an immovable property or land itself, this was the main concern right from service tax days. And in service tax, there is a judgment in the matter of sister judgment in the matter of DLF, which said that transferable development rights is not land or immovable property; it's a service. However, it is, but the language which is used in service tax is what is excluded is transfer in any manner, in any immovable property is excluded. So they used the word transfer of immovable property in any manner is excluded. So technically, though it is not land per se, it is an interest in the land which is transferred, and therefore it is outside purview, but not because TDR is land. That is how the judgment is. When we move to the GST regime, the negative list or the activity which is not regarded as service talked about sale of land as something which is outside the purview. So if you compare this phrase of sale of land with transfer of immovable property in any manner whatsoever, there are three. Transfer has been curtailed to sale, immovable property has been curtailed to land, and in any manner whatsoever is not present in the legislation. So technically, only in case where you sell the land, there is no GST, and in any other manner, if you are actually doing any kind of transfer, you need to pay GST. Now, this is exactly where the dilemma started. If it is not covered within the scope of that exemption, whether should I pay, and if I have to pay, when should I pay? Because this transfer of development rights is the starting point of any project. Unless the landowner gives the development right, the builder cannot even enter that land, because legally he doesn't have a right to enter the premises of land belonging to another person. So people were worried if I have to shell out the entire tax at one go, but my and though it is input tax credit is received, but that will be over a period of the entire project duration, which will take almost 7 years to monetize, 5 to 7 years. Now there are certain tariff-category amendments which added to the confusion, and finally what the industry prevailed, and they were able to get a specific exemption for TDR, which is transferable development right, in respect of residential project. So this is also an example where the industry representations have been heard positively, and there is this exemption given for TDR in case of residential. However, still the problem is in respect of commercial projects where there is a transferable development right, people have to pay. There are provisions to defer this for some time, but there is no complete exemption for this. Now, the recent thing which is happening is there are plotted developments which are happening where transferable development. So whether we have to see it like the kind of residential project is always a doubt, because residential projects are defined in RERA where there are apartments. But in case of residential projects, in case of plotted development, there is no apartment. It is only land which is there. So technically, whether you are getting the TDR exemption for plotted development is a case to case. We have to see how that stamp duty agreements have been worded, or how exactly we have transacted between the landowner and the developer. All that is a fact specific matter, and there has to be some clarity which is still required to be expected. The next one which I wanted to cover is on credit restrictions for immovable property. This is actually for commercial property owners who are leasing their property, because whenever they are leasing their property, they actually get lease rental on which GST is paid. But when actually they paid their expenses during construction, the entire credit is lost because of a specific provision in the GST law, which says that if the goods and services are used in construction of an immovable property on its own account. So the words used are on its own account. That is, the person who is getting the property constructed is using it for himself. Then credit is not admissible. So if the person is actually intending the project for resale, he will get the credit. If the project is intended for leasing, he will not get the credit. So that is how the law is worded. The logic which the developers or the commercial property owners are telling is, if you are taking GST on the rental, why can't I get the credit? This is, if this is not my input or input service, what else is? If I don't construct the building, how will I get this rental? So this is the dichotomic situation which happened. And finally, one of these high courts, which is Odisha High Court, in case of safari retreats, have given a favorable judgment. And the logic given is very, I don't want to use the word funny, but they have interpreted in a very narrowed way, is what I can say, saying that on its own account means only those commercial properties which are used as their own offices. In that case only credits are not eligible. But if the property is meant for renting, credit is eligible. This doesn't have any backup. In fact, this all closes in one paragraph. So in fact, that's why I told there is no logic or no reasoning, or there is no much of speaking order which we can say on this point when they concluded. However, this is the only sole favorable judgment, but currently pending at the Supreme Court. Stakes are pretty high. You know the kind of boom where the kind of commercial properties which are coming up at various cities. So many people are actually waiting for the Supreme Court's guidance on this matter as well. And if Supreme Court agrees to the Odisha High Court, I think that will be another big boon for the industry. But this is definitely not the intention, and because this phrase of on its own account always means it is the ownership. It is not about use for its own office. I think that is why I was actually, at least it's my personal view, with due respects to the judge, I'm not going and commenting about that, but with my limited knowledge and my limited interpretation skills, tell that on its own account generally means it's as owner. And once somebody is an owner, it is not going unless it is meant for retail, further sale. So this is exactly something which many people were actually arguing, giving opinions, etc. But suddenly out of on a day somebody wanted to see some different side of the entire GST law, they were pleasantly surprised by this Odisha High Court judgment, and that actually has created more doubts in entire real estate sector. But still there are unheard or unconcluded representations on this matter, and we need to see how Supreme Court takes up. And after this Odisha High Court, many people have lodged their own writ petitions in several high courts, and Delhi and Karnataka, there are certain writ petitions pending. So we need to see that steam is still not as high as the one Mohit Minerals garnered in the CAF transaction. So here the number of players are limited. So I think the voice is also very limited here. But nonetheless, it's very important transaction to note, because if this credit is given, definitely the commercial rentals are definitely going to see a different costing, because the cost of constructing a building is immense. And if that credit is allowed, and of course anti-profiteering and all, we have to see that how far they will follow, but definitely that will see a good drop in the prices now if this is good. So the impact to the revenue also will be far and high, but we need to see how exactly the government will see the Supreme Court judgment once it is delivered, and if delivered positively. If it is negative, any which way, it will have its own natural death. Now moving on to other important cryptos and GST. I think there is enough of discussion happening on the direct tax front on the cryptos with the virtual digital currency coming in the union budget proposals this time. But how unfortunately the GST Council has not taken its stand as of now. But technically, what is at least there is exchanges on which it is being traded. Whatever the exchange commission, that is definitely a service on which many people are charging GST. I don't think that is an issue. The issue is whether crypto is covered in the definition of goods. That is something which is the moot point, because goods definition excludes money, and money includes only legal tender money. which is Indian currency or foreign currency. But here cryptos are neither recognized as a legal Indian currency nor a foreign currency. There are one or two African nations which recognized specifically with the legislation, but I don't think that is having its force to say that crypto is covered within the definition of money as far as GST is concerned. So if that is not the case and crypto is being traded, and there is also one more judgment which has come earlier in the case of TCS, where it said if once it is capable of being sold, everything is regarded as goods. This is in the context of packaged software, they told. So whether it is intangible or whether it is tangible, all that it doesn't matter. If it is capable of being sold, there has to be tax on that. So all this logics makes it more vulnerable. And please don't mind, don't quote me as if I am telling that there is tax now. There are enough arguments to say no tax, because this is also one kind of investment. But if you go hyper technically, there is a case where department can sue, and that will have a huge ramification. And that is the reason why GST Council is taking its own time to lay down a law very clearly, saying that at least the trading of cryptos is outside the purview and only the commission. And one more thing which is more worried is when this entire income tax has been introduced, time and again the finance ministry officials were telling we have never recognized it as legal, and legality or otherwise doesn't bar tax in the transaction. So it is a settled but now unsettling this industry. So while there is one parallel discussion which is going whether crypto is a legal tender money or whether it is acceptable as a form of currency, that is another debate. At least the finance ministry has recognized that if you are earning money, you have to pay income tax. And on the same lines, if they want to bring something from the GST perspective, that's going to create ripples. So technically, we need not wait till the legality of the crypto is finalized. At least the income tax decision is a clear example of the government stand that even if it is not legal, they can still go ahead and levy a tax on the same. I'd just like to take a 3-4 minute break if permitted. Is it fine? Hello.
Sir, hello.
I'd just like to take a 2-3 minute break if it's fine.
Yes,
Can
sir,
you hear me?
Yes, sir. Please. Your voice got broken, so sorry, I couldn't hear you. We can have
No,
a break,
I was
sir.
just telling. Yeah. 2-3 minute break.
Yes, sir. Yes, please.
Thanks for allowing. Yeah. Now moving on to the next one. There are certain new concepts of composite and mixed supply which are defined in the GST legislation, where composite and mixed supply is nothing but these are a combination of supplies which are done as a single transaction, and composite supply is defined as a transaction where one of them is a principal transaction and other supplies are incidental to the main transaction, whereas mixed supply is something which is all supplies are of equal importance and there is nothing which is a principal supply, but all supplies are of equal importance. So whether incidental supply, whether a supply is incidental to the other one or both having is a matter of fact to be established. Now here this is more of a rate difference, because in composite supply GST is always payable at the rate of tax for the principal supply, whereas in case of mixed supply it is taxed at the highest rate among the other supplies. So technically, if you have to give examples for composite and mixed supply, composite supply is any supply of goods from a factory where insurance and freights are always included. So you are actually giving 2-3 services, but main service or main supply is the supply of goods. Freight and insurance are definitely incidental. So in that case, whatever is the rate applicable for the goods is what you have to pay on the total consideration, including the freight and insurance. Mixed supply, the best example is the gifts, which the box of gifts where there were a Diwali box, if we can say, the fruit and nut, the chocolates, where various other items, sweets, and other items are actually packed, but there is nothing which is principal supply. Why I'm actually talking about this is all of these various versions which you go into the mall on a daily basis, you will see one says it is 1 + 1 free. So while somebody may say that because he is giving one free, so you are actually giving a free supply, so that's why I will have to pay tax on only one, and whatever is the GST paid on procurement I will not pay on the other, saying that it is like I am getting one free. But what is happening is he is collecting the price of one while supplying two. He is giving a 50% discount. So if I turn the table and now write it as 50% discount, the law is different. But if I turn the table and write it as one free on purchase of one, then actually I am actually putting myself into a problem. Buy A, get B free. This is buy 3 at the price of 2. So if you see these malls these days, most of them are offering discounts actually. Or buy 3 get 7, buy 3 get 4. All of these things, why they are happening, rather than if you might have seen this word free, which is going very much less prevalent, at least the branded ones or the big brands which are there in these malls, because all these composite supplies will have different. If I am actually giving this buy 3 at the price of 2 and one of them have a different rate, if say for example one because in ready-made garments also there are different rates, one with up to 1,000 rupees MRP is a different rate, one with more than 1,000. So how will I treat the entire package? So this is something which is still there are no judgments, because people are now at least trading with caution. But definitely this is one area which will get picked up during the audits and assessment is what I feel. And once these audits and assessments are going, and if you are able to convince the officials and get with flying colors, I think that then only we can say that this issue is more or less dusted. But otherwise, this is one transaction which we all need to be cognizant, at least till the first 1-2 assessments are completed across all the states. Now, this is the issue which I have actually covered in the while talking about hotel industry. Here also it is the composite supply, and see the kind of combinations which are there. So we have room rent, room rent is dependent upon the tariff. Food, which is dependent upon the restaurant supply, which option you are choosing, whether because within the whether it is in room dining or whether it is a room service, all of that is a different rate. Coke, which is applied on which there is a 28% plus compensation cess, and liquor, which is outside GST. So if you are actually providing all of this as one service, how to actually go ahead and tax? While the principal argument is that all of these services are possible because I have taken room, that guy is serving me in my room. So whatever rate which is applicable for the room rent has to be applicable for everything, is an argument. But in that case, even I have to pay GST on liquor. But that is not the way people are saying. They have different POS machines. Liquor is always considered outside GST and they charge it separately, and they don't mix it as a composite, because one of the principal things which is relevant for determining composite or mixed supply is the consideration is one and same. There is no breakup of consideration in case of composite or mixed, because the moment you are breaking up, then you are actually not providing all supplies as a single supply. The moment you are able to bifurcate this, that is when you can say that I'm completely coming out of the composite supply angle, and then I can apply the rate which is applicable to the respective single supply. So these are the interesting combinations which are there in the hotel industry. So I just took one of these most complex combinations which could happen in the hotel industry. This is drop shipment. Drop shipment is something which is possible in case of entities dealing in multinational cross-border transaction. So typically what is a drop shipment is a person sitting in India actually has placed a purchase order, and say for example a person who is having goods in Dubai, and the goods have to be shipped to a person in Singapore. But there is no need for the goods to come to India. So technically the Indian entity is buying the goods from the Dubai entity and selling the goods to the foreign entity in Singapore. Since this transaction is done by Indian entity, obviously the GST authorities at the beginning of the GST legislation thought that this should something attract GST irrespective of the fact that is the goods are not coming here because the person who is supplying the goods. However, wisdom prevailed and there is amendment to the legislation where they have introduced one line item within that schedule where which are transactions which are outside the purview of GST, saying that so long as the goods do not enter the Indian territory and go outside the Indian territory, which means which is not coming into India and going outside, which is the typical case of a drop shipment, there is no GST and you need not worry about paying GST. So technically, if some goods come into India and then go from India as a separate transaction, then GST will be definitely there. But if that is not the case, then technically what will happen is the transaction is outside the purview. On similar lines, even the high sea sales were also made exempt or kept outside the purview of GST. High sea sales, many of you would be aware, in the VAT regime, that was one of the hot topics at the time of assessment, with the kind of documentation, proofs, etc., to claim exemption from GST. Even in that case, because there is no supply which is happening within India, because the high sea transaction happens when the goods are still in the customs before the crossing the customs frontier. So that is also an extraterritorial transaction, and therefore there should not be any GST on the same. And government has recognized the importance of giving exemption for these transactions and amended the GST schedule accordingly. Now, the other transaction which is of paramount importance is availment. In fact, I was actually, while preparing for this presentation, I was actually comparing how exactly this law evolved from, say, 2004, when there is a cross credit introduced in Senvat credit, till now. In 2004, when the credit rules have come in, the first question was always on eligibility. What is eligible? What is ineligible? I think what happened in the last 15 odd years is that at least now eligibility is more or less settled. And many people used to feel that once it is eligible, what is the problem? I can take credit. Now, the law has evolved so much that eligibility is fine, but availment is different. Earlier, eligibility and availment are used to be written as a synonym. Whether I can avail credit or whether I'm eligible to take credit, these both are same. But GST law, the way it is evolved now, availment is a different, completely different process. You may still be eligible, but whether you are entitled to avail is something which has evolved. This is only like a intellectual debate which somebody in the law ministry has wanted to split the phrases and then give separate rules for eligibility and separate rules for availment. Because what they are telling is that you may still be eligible, but if your supplier is actually making a non-compliance, you are not entitled to avail it. So what is the point of me getting an eligible input or an eligible input service if I am unable to avail it? So this is a very funny, tricky situation which the trade is in, unless everybody is accustomed to all the technological changes. But till that time, all the vendors are brought in the technological realm, and then all vendors comply 100%. My credit, whatever is otherwise eligible, is I'm able to avail. Now there are various rulings which are saying that you can't penalize the buyer for fault of seller. But here what is happening is that because I am unable to catch hold of the seller, what I will do is that I will penalize the buyer. It is the reverse way of enforcing the compliance. So if I stop credit in the hands of buyer, he will ensure that the seller files the return. Why myself as a government, why I should bother too much? Let the buyer enforce the compliance on the seller. Strategically, it was a very good, but enormous amount of stress and enormous amount of working capital impact this entire rules of availment are creating. I'm not too sure how the legal jurisprudence will evolve over a period of time, because while big corporates are able to have systems in place and processes in place, I'm not too sure whether the people in the tier 2 and tier 3 cities or even in or MSMEs, all of them are able to get the credits whatever they were planned, and how exactly the working capital is getting funded. I think that's a nightmare which I can definitely imagine. But law is law, there is no exception. So we have to see how exactly this will evolve over a period of time. So always this gives rise to a doubt whether technology is a barrier here or a boon. Is always many we are still wondering. Am I entitled? See, that's what I'm telling. I'm eligible to take credit, but what I can do with that eligibility if I can't avail? Now, on top of it, people are now getting notices saying that your credits are blocked for something or the other, some practice which you definitely don't know where exactly the issue is. Maybe because your 2B credit was lower than whatever you credit taken in 3B. They were blocking the credit without giving enough notices. Already certain courts have pronounced it, saying that without unreasonable, there cannot be any unreasonable steps taken by the government just to block the credit without as per their whims and fancies. But it's only 1 or 2 which are reported, but we don't know how many more are there at the field level, which we have to see. And this definitely will have its a fair share of debate over the coming years, and this is going to be the ongoing debate. I'm not too sure this will end or this will reach some finality in any near future, because this is completely dependent on the compliance status of the entire vendor community for each person. So we will have all kinds of vendors in our ecosystem, and we may not able to find 100% compliant vendors for every organization. So technically, this kind of litigation is going to be there. We may actually try and reduce. We may set our standards. Like earlier, it was 70% compliance, 80%, but 90. Definitely, it will not go to 100 unless you are so robust in your AP processes and vendor managing processes. So this is technically the biggest area of litigation and biggest area of debate with the government in the coming days. It has already started, but the way I could see the future assessments and all will revolve around this. Already the discussions have started separately, but once the year-end assessments start, I think this will be a big area of concern. The other transaction is intermediary service. So here actually what it happens is entities which are there which does sales and marketing support. So what exactly is intermediary service is if somebody is acting in the capacity of a broker or agent who is facilitating the supply of goods or services between two parties, then he is called an intermediary. And if he is providing an intermediary service sitting in India to a foreign party, it will not amount to export because the place of supply is treated as India. So say for example, I am a subsidiary company of a foreign entity who is actually providing marketing support to my overseas holding company. So since I am doing the service from India, where I am facilitating the supply of goods from foreign country to the Indian country, acting as a broker or an agent, my service fee is subject to tax and the benefit of your export is not eligible. So this has reached its stage where there is a dissenting judgment where two judges have given contrary views, and there is a CBEC circular which has also composed that, because after these judgments, what the government felt is whether these back office support services, whether these customer care entities, all these are actually providing intermediary services or not is a matter of concern. So it's more like a some sort of a clarity, but I would not say it has a completely addressed because they're still telling that you acting as broker or agent is a fact of every transaction which we need to separately examine, because these entities which does sales and marketing generally have the contracts worded on a P2P basis, which is principal to principal basis. So the argument of all these foreign subsidiaries is that I am not acting as a broker or agent, I'm just facilitating as an independent service provider. So we need to see how exactly the law further evolves, but at least this has reached a stage where there is a contrary or dissenting judgment. We need to see what the final stand, what the third judge will say in the period to come now. And then once there is new clarity, probably then we have to see the government's way forward actions will be. One more important point, I'm not too sure how many of you have faced this, is there are certain interesting amendments which happened in the CST Act post the introduction of GST, where procurements on C-form have been barred for companies which are engaged in GST supplies. So I will give a for example. If I'm a pharma company, I'm actually procuring a diesel which is procured from outside the state. Earlier, I was entitled to procure the same diesel on C-form because I'm using that diesel for my manufacturing activity. Now, the same thing continued for about some 9 months or 1 year. So after that, the government realized that people have started procuring it diesel from interstate, and actually they are not getting the revenue. Some intelligent officer has plugged this entire thing, and there was an amendment in the CST Act where they told that unless you are dealing in a non-GST good, you are not entitled to use the C-form. So technically what they are telling is diesel can be procured on C-form by an alcohol. It's an example which I want to just emphasize. By an alcohol company it can be procured at a concessional rate rather than by a manufacturer of life-saving drugs. So this is the dichotomy at which we are now. So the only resolution will be putting diesel into the GST, and we all know how long it might take. We may see another decade by the time petrol and alcohol and everything comes into the GST regime. But till then, you have to pay the state applicable rates, full rates for procurement of diesel, and that is the plight of all these manufacturers of GST goods as of. So this will actually increase the cost of procurement. There is no choice, but definitely an issue which is worth pondering. And I think that if at all some benefit has to be done, there has to be some resolution or agreement by the states, because this will directly reduce their state revenues if C-form is given. Maybe a lower rate, not at 2%, but say 10% or 15%, something they have to come, because you're completely disallowing the interstate procurements of diesel or petrol or any other non-alcohol, non-GST goods here. And there is no option of credit or refund, even if we are an exporter. Nothing, nothing which is coming to the back to the person who is dealing in GST commodities. So this is an area of concern which people have to take into account. One minute, I think there is some issue. Yeah. Yeah. Now, one more important aspect which we all need to see here is when we are advising the clients or when we are actually dealing in our respective companies, one of the important things which we need to understand is for levy of GST, there should be a supply. So whether there is a supply or not, some of these interesting things which I have noticed over a period of years, where the question always comes is there a supply or not? First and foremost, notice period recovery. So when I'm actually terminating my employment contract, ahead of the notice period, something is recovered from me by the employer. So whether I'm actually required to pay GST on that. So I'm not doing any service. It's just a breakage of the contract. It's the same way like the liquidated damages arising. So these two are the right back. In all these three cases, at least the 1, 2, and 3, what is happening is that technically there is no positive act of doing an activity which can be construed as a service. Now there are contrary rulings on this. On the notice period, at least we have been seeing the advance rulings coming positively. So at least that dispute is more or less now at least settled, saying that there are positive rulings and we can go ahead. But on liquidated damages, people are still wondering whether there is an element of supply or whether it is a mere breach on for which there is a penalty. While a strict interpretation gives rise to that there is only a breach and it is not an activity which is a supply, I think department is still not in a position to accept that there is no GST as a thumb rule. So we are still seeing those advance rulings coming against the trade, but this is definitely one area where we need to be very much vigilant when we are dealing in a transaction where that involved liquidated. On a safer bet, people were actually telling that if the person paying is able to get the credit, why unnecessarily get into a problem? But I think credit eligibility cannot be the reason for deciding the tax applicability. But as a principle, credit eligibility will follow. That's a corollary. But tax applicability has to be decided based on the nature. So that's where the transaction becomes a bit more trickier. While definitely there are good arguments to say that there is no element of supply and therefore there is no GST, all depends on how these liquidated damages have been defined in the contract. Right back of the creditors is definitely something where there is no supply, and this is something which is a reconciliation item even while filing the annual returns. Reimbursement of expenses most likely, or actually unless there is a pure agent, they have defined a concept which was earlier there in service tax also. That is, if there is a pure agent relationship, only then there is no GST, but otherwise there is a tax payable, and this is something which all the CA community also charges on all the reimbursement of expenses. So this is more or less settled. The other last but not the least one, the profit share versus revenue share. So here, like say for example, the joint development agreements which I saw. So technically, how exactly the transaction is being done between two parties. Say a joint venture, when people are coming together as contribution of capital and they are jointly doing, whether sharing of profits mean is one person rendering service to other. Well, the answer should be technically no. But many a time what happened is joint venture is only at the title, but it will be clear when you go to the details that actually one party is rendering to the other party. So whenever the intention is to have a joint venture arrangement, it should be so tactfully and so carefully worded so that it is actually a joint venture and not that one person is rendering a supply of service or goods separately. Revenue share is also something where we need to have a clear-cut transaction. Definitely, this is not something where principally it can be said that all revenue share or all profit shares have GST. But these are certain transactions which always go with the documentation, and we need to be very clear while drafting the arrangements itself. Grant of ESOPs, you might be thinking why this is covered here. What is the problem? Grant of ESOPs is always to employees and supply to employees is not subject. But if you actually carefully see this ESOP rules, it is also given to non-employment contracts like non-executive directors, etc. So whether grant of ESOP to a person who is technically not an employee in terms of having an employment contract, what will have to be done? Say a non-executive director is entitled to ESOPs for doing certain activity. Is it his directorial remuneration on which there is a reverse charge, or is he providing any management consultancy? That's a big area. Or whether he is actually getting as a honorarium. All this will come into picture. What is the non-executive director's role in getting that ESOPs? Because the word ESOP technically understood as granted to employees, but one thing which is very clear from a severe perspective is that ESOPs are also given to non-employees. So I am talking from that perspective. Whether there is any chance of an interpretation, I think this is definitely worth taking a call cognizantly. If we are taking a standard view that ESOPs are not taxable, I think that might land us in trouble in specific cases where it is given to non-employees or who are not having employment contracts. Now moving on further, this is what I was telling. So while on the transactions we covered all these 10-15 transactions, I would like to take a break before I go to the concluding part, where exactly are certain specific pain points and what is what lies ahead. I would like to pause here because this is the crux of the entire presentation, is what the kind of transactions which I would like to cover during the allotted time. I will cover some 5-6 more slides, but I would just like to take a pause here to see if there are any questions.
Sir, are we done with presentation or else? Yeah.
There are some 5-6 slides, but I just thought this is more the concluding remarks on the entire thing. So I just thought if somebody has any questions till now. Or do you want me to cover that and then let's talk?
We'll cover it, sir, and we'll compile it, and maybe we'll give the audience to unmute themselves and ask, or else they'll be putting it up on our mail, and we'll share it to you. When time permits, you can respond, sir. As of now, I'll compile it. You can cover that points also. It will reach at least 7 or 7:10. Then we'll take up the questions if any. Okay.
Sure. If you have seen this entire discussion over the last 1.5 hours, you can notice that the kind of transactions are immense. The implications are far-reaching unless planned well in advance with a very clear, cognizant direction as to how exactly we wanted the tax treatment to be. Because indirect taxes, though, are always collectible from the customer, but if it's not planned right at the time of executing the transaction, collecting the same at the fag end of the transaction or post the assessments will always be a challenge. So the entire purpose is actually to give a perspective to all of you that while GST has given clarity to the regular course of transactions and we are more or less clear, there are innumerable variety of transactions where there are complex issues and the law is still evolving. That's what I would say. I would not say that there is no clarity, because we could see the government taking respective action and correcting, and certain industries taking proactively and then taking up the matter to the GST Council. So there is various action which is happening at different levels. But there are still certain specific pain points which I wanted to cover, like say for example the advance rulings, which I talked during the presentation. So are rulings really clarifying the issues, or they are confusing? Because in some cases what happened is some advance rulings say that you could not, I don't have the jurisdiction to answer your question, whereas some other state actually addresses the same concern in a different way. Some say that recipients cannot file advance ruling, while some others say that since this is a question on input tax credit, he can also ask the question. So actually there is no clear clarity on this. From what is expected is, at least although the law is clear, I think there should be some centralized mechanism, at least as an FAQ, or because already 5 years have elapsed and mostly all kinds of issues are seen. I think government, it's high time that there is at least some set of clarifications on how to approach advance rulings is something which is provided. And main other thing is that conflicting rulings across different states on the same matter, that is something which needs to be addressed. Because if there are two different rulings on the same matter, what should I do? Should I pay tax at 12% in one state and pay tax at 18% in the other state? I think that's completely illogical. So we need to have a resolution mechanism, and that has to be properly implemented with some senior officials taking up the matter seriously. Pro-revenue conclusions, which is most commonly seen. In fact, now people are last couple of years, if you see, they are very cautious to go to advanced ruling, because they are very much clear, if I go, it will always be pro-revenue. Although there are certain cases which are pro-trade, but I think those are very limited. And main other question is, it is not merely pro-revenue, there is an absence of appeal mechanism. So once there is this second level of appellate authority, where should I go? Should I go to High Court? Should I go to Supreme Court? Should I go to the tribunal? There is no tribunal. Where should I go? There is no national authority which is on the cards, which is the possible. So there should be some clear guidance from the government as to whatever advance rulings have come till now, also how they want to see and what exactly is the future course. So this is advance ruling is one pain point where people started as if they got the they got a very good weapon in their hands where they can make the department binding. I think department has shown its true, I would say, intention. Not in a bad word, I would say, but the way in which the law can be used to create their own sets of conflicting interests, I would say. So now it is a time when if somebody wants to go to advanced ruling, we need to be very cautious, unless the matter is so critical and unless the matter is so complex from taking a stand. It is better to avoid the advanced ruling. This is how the consultants have been giving, but that's a case to case. We need to see that and take further action. Input tax credit. This is also one which we have seen. Dependency on the technology has become very much. Genuine buyers are facing difficulty, and audits and assessments. Now what one more big area of doubt which I have is that till now there is no physical verification of documents. Till now, it is system verification. You are just seeing an Excel and then actually taking a decision. But if you see the rules, everybody has to get a valid invoice in their position. This is one of the pre-criteria for availing a credit. And we have not actually entered that phase where audits and assessments start, where the person asks us to bring the physical copies, physical or scanned copies. At least the document verification has not started. It is all now based on something which is populated in Excel. All the decisions are taken. But if people are telling that once this question is there, we are out of this and my credit is secure, safe, I don't think that is the answer. The document verification process will happen definitely at the time of audits and assessment, and we need to be very clear about having the requisite documents till the period of limitation is there. So, and suo actions also we need to be very much cognizant. The unknown future is what one of the doubts which of how are audits and assessments going to happen? Is it that I have to submit each and every document line item wise on the sales invoice side and on the purchase invoice side, and audit and assessment is going to pick up all these documents and then the same VAT old VAT regime kind of an assessment I have to face? Or is it a sample risk based some technology will be used? Or will there be a faceless system which will come, or officer come and sits in your own premise? So people are actually now fed up with notices only, but no one actually has seen the assessment process in so detail. But that once it starts, I think that is the time when people will be even more worried for the next 2-3 more years as to how this process will evolve. And then we will also have this position of consistency of tax position. Today we are seeing only different positions being given by advanced ruling. Now what will happen if jurisdiction authorities start giving different assessment orders? In one state accepting your thing and in the other state raising a demand notice. What will you do if both of the states give a different reason to deny whatever claims you have made? How are you going to handle the litigation separately? In that state, what will you do from the date of assessment order for the future transaction? I think the tip of the iceberg was only what people have seen till now. Not that I'm putting a frightening situation, but I think we need to accept the reality that we have not started to see the actual assessment work. Until the assessment work is done, then only we can say that yeah, we crossed first year of assessment, that's why we are happy. Or we were to see how the department also evolves in terms of doing all these assessment. This is one of these unknown futures, and there is still this unfinished agenda. So the objective of seamless flow of credit. So the list of non-taxable goods which are not getting trimmed. So we are not seeing even a single addition in the list of goods. All the petroleum products, the stamp duty inclusion, electricity duty, all these things are still outside. So I'm not too sure how many more years we have to live with this kind of increased cost on the procurement side. So that is not an not an advisable or not an ideal situation which we have to factor, but we have to see this at least the unfinished agenda has to be completed at the earliest possible time. And introduction of specific rates as a self-build, like the real estate or the hotel. Then what exactly is the government's way forward? Is it that they will stop with only these restaurant and real estate, or will other industries also want a rate without availing credit so that at least they can stop capturing these 2Bs and 2As and then move into a regime without credit? Is this the ask of many industries, or how exactly it will happen? All these things will come once a couple of years of assessments are over. Portal issues and glitches still keep on happening, so we need to have a robust system definitely. While it may be currently like 80-85% ready, but I don't think people at large will echo the same kind of sentiment unless they are working in large organizations. Trimming of rates, we do have multiple rates which are actually creating more issues. So this 12 to 18 and merging of these two into one. constitution of national authorities, and establishment of appellate tribunals, and need for speedy results. So there are certain industry like the crypto, if you take an example. I think we need to evolve a system where if there is an industry level issue, there has to be some priority treatment in terms of constituting a committee or a working group, which will take a time bound action. I'm not telling that we need to get the resolution in 1 week's time or 30 days, not like that. But at least there should be some reasonable time limit within which, because the industry will be carrying a huge burden on themselves without having clarity. So at least the industry level issues, because the players are also very cognizant that none of the players go to at least a single advanced ruling, that entire industry will be at jeopardy. So there has to be a separate resolution or a speedy resolution process for industry level. I think that's the need of the hour is what I feel. And if that can be done, I think parallelly these advanced rulings and the audits assessments can take its own time. But there will be like critical issues at the industry level. They can create certain criteria of how many players to be represented, etc., etc. And then some speedy resolution ideas need to be implemented. So with that, I close my session here, and thanks everyone for your patient hearing, and I'm open to take queries, and also thank the organizers and the entire SIRC team for giving me this opportunity to speak to all of you and listening me for this 2 hours.
Thank you so much, sir. I'll just start sharing my screen, sir. We have some questions. Just putting it in the Excel sheet, sir. Is my screen visible, sir?
Yeah. Yeah, the first question is on the horse racing. See, there are certain activities. The 28% is only to prohibit some of these activities. So technically, if you are telling betting, gambling, all of these, horse racing, all of these to come into a reduced rate, I don't think that is going to happen anytime soon. In fact, it's only that we can hope that it won't increase further. That is what I can say. Newspaper publishing company having free supply is about 5 to 10% of total. Any GST required on consumption of newsprint, which takes input. Of course, it has to be free subscribers. I'm unable to get that second question. If somebody can explain.
Okay, the concerned person will try to ask him to come online, sir. The next question will take up, sir.
Yeah, e-invoice applicable to the supplier but not issuing, whether department may make any dispute on input. Definitely the technical answer, if I say, is definitely they can dispute the credit. And in fact, many organizations have implemented processes saying that if e-invoice is applicable and not given, they are not taking credit. Because this is an area of big concern at the time of assessment. And in fact, the NIC portal, which is on the invoice, they have given whoever is eligible. So you can't even say that I don't know whether my vendor is required to give invoices. So they have given it publicly. Whoever are the registered taxpayers who have to issue this. So if your vendor is already in that list, then it is up to you to at least ask. So taking a cue that how will I know? I don't know his turnover. I think all those arguments will fail. The government has tactically made it a point that the entire list across India is put in open public for website itself.
So the second question was asked by CA Yadvalli Sai Karnakar, sir. Sir, you can unmute, sir, and you can ask the question. Mr. Karnakar, sir, or you're online? Let me just check if there any other questions, sir.
You can forward the question in detail whenever you get it.
Yes, sir. Maybe I 1 minute, sir. There's one question that came up now. 1 minute. So this one, I'm just putting it on the screen. This one regarding ITC reversal.
Developer share, how much GST is to be reimbursed? This question requires in whose hand the reversal is. First, if the developer share is that, if ITC reversal, developer share 35, how much of the unsold inventory is there in developer, and that is the portion on which there should be reversal. So out of that 65%, how much inventory is unsold on the date of completion of the completion certificate, that will determine the ITC reversal. At a very high level, that is what I can say. Second is, for RCM for landowner, the formula is given in the notification itself, saying that how much soever is unsold. There also the proportion of unsold, but the value to be taken at the time of agreement. That is how they have given that unsold as on the date of completion, right? Then entire thing has to be reversed.
Let me just check if there are any. One question that came up now. RCM input 5%. This one, sir.
RCM input 5% on transportation is claimed in the portal. Why there is a need for reversal, I am not too sure. If RCM is already paid, and your output supplies are taxable, then there is no need to claim, or there is no need to reverse, unless it is used for any exempted activities. You can still claim the credit, so long as you ensure that RCM is paid in cash. So at least one payment in cash has to be done.
Yes, sir. Those were the question. Let me just check if there is any. Or else, if any question that comes up over mail to us, we'll share it to you over mail. So when time permits, we can respond. We can share it with the respective participants, sir. And our Subharav sir is engaged with another meeting, it seems, so he couldn't join back for vote of thanks. So we take a privilege on posting vote of thanks. Thank you so much for addressing our members on GST on impacts on selected sectors and transactions. So thank you so much for the time spent here. Instead of having you're not well for last 3 or 4 days. Hope you're doing good.
No, that's not. It's my privilege to talk to all of you.
Thank you so much for taking up session for in SIRC. So we look forward to have you in person, physically in SIRC also, sir, for future sessions. Thank you so much, sir.
Definitely, I would love to be part of it. Now that all these restrictions are going, it is always good to be in physical events as well.
Yes, sir, please. We look forward to have you in person, sir. Thank you so much, sir.
Thank you. So can I leave?